Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, and we're here now at the 29th of November, 2022. Now, I want to remind you, there's just a few days left in my Cyber Week sale. So if you're serious about wanting to get my research, any one of my research yearly subscriptions gets you free a choice of my original charting course, the enhanced Bollinger Band course, or my just-to-be-completed outside day continuation course. I think you'll find that rather fascinating. All of the course prices are going up in 2023. So if you're looking to buy anything, I promise you they're going up, and they're going up probably 20%. So everything's going to be going up in price. I, like everybody else, have expenses. They have to be met, and in order to meet them, got to do what you got to do. So this is a great time to get your subscription locked in on that price as well, because that may go up. Just like everything else, I look at 7-10% increases on everything we have. I haven't raised prices. I'll bet I haven't raised prices on any of my stuff in a decade. So it's probably getting time to do so. I'm just too low on the price, and the value of it's pretty good. How do you get this? It's simple. If you have questions, you call my staff. Move your cursor to the top up here. Move around with that. And as you move around with that, just give it a click and away you go. You'll see a cursor that comes up. Everything's explained right there, right then. A lot of you are taking advantage. Thank you. All right, so let's go to the markets and understand what tomorrow's going to hold. I don't care about all the economic data. I care about one thing. Fed Chair Powell speaks tomorrow afternoon. And what's he going to say? That's going to be what this market's all geared on. Everything else until Friday's jobs data report, it's the icing on the cake. That's all it is. The cake, though, is Fed Chair Powell. Is he going to be super hawkish? Is he going to be pulling back a little from what the other Fed members have been saying? Because they have been very, very bearish. And if he's going to stay longer, in other words, rates do whatever they're going to do, who knows? I happen to think he's going to come out and say he's data dependent. He's been consistent with that. That's where he's going to go. Are we getting sticky data, or is it weakening? We saw the last sets of data wobble for the first time. Is this going to be a bigger wobble? And can we build on that wobbling to count that interest rates, the Fed is finally getting the job done and the market is responding to it? There's a lag time. That's what we're going to see happen. It was a very mixed day here today. I mean, big time mixed every which way that you look at it. When we take a look at BTU, yes, I've changed. One of you asked me about this to do Peabody Energy, and it makes sense to do it. I was looking at the chart, interesting chart, been coming up. As we take a look at the action on the swing line, the trend has been up with higher lows, higher highs. The market has been over the key moving average, the 18-day moving average of closes, and the market has paid very good attention to it. It holds at key numbers. It fights a battle when it gets over it, at it. Interesting. I've never charted this particular one, and I saw right away that I liked what it did. And then I saw this. When I saw this, I said, uh-oh, that's why I want to show it today. You're up to the upper Bollinger Band, so I'd be careful here. You got as high as 31.96 today. 31.92 is the upper band. Each time you've gotten to these bands, they've paid attention to it as they should. I've been impressed even on the downside. Look at how the 200-day average and the lower band worked out. And then I saw where the market's at in an overbought condition. So you have an overbought market that has hit the upside target that where it typically stalls out against the upper Bollinger Band. It is not embedded. I think the pros are taking money off the table. Lithium. I'm looking to see just how low this market wants to come on this break. I'm targeting this area here, the $64 level. So a little bit lower, $2 more. It could get there. If it does, I think the pros will be covering shorts unless you get the embedded reading, which you don't have yet. If you have that, until that's lost, be very careful. Lose it if you get it, then I think you'll get back to the 18-day average. But barring that, this is a market in a downtrend. It has a little room left, not a lot. So I'd be paying attention to that. We then come to Apple, and I have not been a fan of Apple for all the reasons that you already know. I am looking at the problems at Foxconn. I am looking at missing 6 million phones for the holiday sales. I am looking at how frugal people are. I mean, when I look at how Cyber Week and I look at how the sales have all gone, and I add to that the inflation of, say, 7-8%, did we really go up that much? We kept up with inflation, but that's about it. You bought a similar amount of goods. I just don't know. You might even bought less goods. Now, the good thing is that I'm not hearing supply chain issues. I am hearing that there's plenty of product out there, which means to me, sales coming for Christmas. Yep. So I'll be looking at that. But right now, this is down. Could we be going back to the 135 level will be a big question for that. In Disney, the market under pressure. I told you, it's going to take time to see what Bob Iger can do with the company, what his turnaround program is going to be. He's concentrating on one thing, and he'll get that done, profitability. But at what expense? That becomes the big issue. All right, movies, they're okay, but are there blockbusters? We're not seeing them just yet, so we have to see what that is going to do. In XLF, the financial services, well, why even guess on this until you know what the Fed chair is going to do tomorrow? Because what he says will impact the banks. Now, you've got an embedded reading. If the red line closes under 79, then I think that you're going to make a run back at least to the 18-day average. It's not big from here. It's only 60, 70 cents, and the market has to regroup. If the market likes what is said by the Fed chair, well, you probably turn the red line and get it back over the blue, and then you can accelerate again, possibly to the upper Bollinger Band. I think tomorrow is just super important with getting the Fed chair out of the way, and I promise you, I'll be a broken record in saying I don't know that you want to get too aggressive until we get out of the way the jobs data, which sort of sets the tone. If jobs weaken, what does that mean for CPI? We'll start extrapolating that. But if it stays strong and stubborn, what does that mean? What does that mean? The Fed has to stay the route even longer. It's a big time for that report. So I was counting on that being an important report. It is. I am nervous about what the Fed chair will or won't say tomorrow. On XLI, you lost the embedded reading today. Time to be gone from this market. And I know you're going to tell me, but Ira, the market closed up 61 cents, and I agree. And I've had clients that I've been telling from back here that I like the market. But I'm now formally saying, I think it's time to cash in some of the money. Often, you lose the embedded reading before price action kicks in. Now, could it be a false reading? Well, what do I mean by that? That might be the first thing that you look at. What you look at on something like that is, does the market, if you back off, re-embed right away? It could happen. Do I think it will happen? I've got my doubts about it. All right. Let's see if I can get this to come back. There we are. I'm sorry about that. But we'll see what that all does. Next, what we have is XSD. On this market, you've pulled back to the support of the 200-week. I've had trouble wanting to tell clients to buy this because generally the first time you get over that 200-week, you get a failure. It traps people up there and it tries to pull back. It's just been something I've watched over many decades. The second part is you had lost the embedded reading, and I had been waiting for the market when that happened to come back into the support, and it's finally there. So it's almost like a chalkboard. I can erase things and say, okay, I'm getting ready to look at you real hard, but I don't know what I want to do just yet. In the home builders, you know what I've been saying. I think you're caught between the 200-day average, the 18 and the 100, back and forth. The action's been much better than I thought, but I still am concerned that an overbought condition reacts and gets rid of that in one of two ways. Either you embed with both numbers going sideways over 80 for several days and lock in the momentum, or it gets back under 80, and that drives prices typically down to the closest main moving average. So there might be room here to get back to the 60.04 to the 59.98 level. I'll take another look at it then. I don't see anything that I'm in a hurry on right now. On the energy sector, so which way does this all go? Still no news on a cap price out of the European Union. They've got to give us one or it gets even a worse situation there. So I've been looking at that. As for everything else going one way or the other, well, energy prices sort of, I think you'd agree, spinning around here. OPEC meets this week. And instead of meeting in Vienna, they decided to do a virtual meeting again. Why? I have no idea. The different analysts, I read the surveys out of Reuters and out of Bloomberg, and it's anywhere from they do nothing to up to another 2 million cut. And it's so split and all that I don't know that you can get your handle on it. What I can tell you is they probably aren't happy that prices keep slipping. But when you really look at the scheme of things, is it much of a slip on the energy sector? No, you have to go to crude to see those pictures. In GLD, the momentum is down, and you can see how the market's failing here a little bit. But the word is a little bit. It's not a total failure. Silver, we read right. I told clients it's probably going to get caught between the 200-day average and right through here. Now, it gets a bit bearish again if prices break through this 2020 level. So I'd be watching that with some, is it 2020 or is that 19? It's probably not 2020. This could be 1920. I'm just looking at the 18-day average up there. That's probably a little lower. But this is mostly about China. President Xi, he said that he would accelerate vaccinations on the elderly. The Chinese government is looking at the protester pictures that they have, putting pieces together. Who are they? They're asking people to come forward. That's like saying, why don't you take me to jail? I don't think that's going to happen. The schools are demanding that students that were there write papers and turn them into the government. That's hard too. I mean, you don't know where that's going to lead you. I wish the government would just let it go, take care of what they got to do, because the people have voiced something. This zero tolerance policy isn't good. Get away from it. Then we get over to copper, COPX, and you can see the battlegrounds right here. There's been a lot of writing recently about new technology to capture out of the ground as you pull the copper, extract it. There's an awful lot of still copper elements left in the ground, but getting them's too expensive. Well, there's some new technologies that have been around, and they're getting a tremendous amount of play. And the reason they're getting that play is because, as I told you, as the world comes out of this COVID abyss and gets away from the initial inflation reading, is everything picks up. Copper is going to be in monstrous demand. It's used in everything electrical. And as that comes into demand, we're going to see we don't have the resources for it. You got to understand where the copper's mined from, how it's treated in Peru, Chile, and so on, and what you have to do for it. It's problematic and necessary. So, I've been telling you, I think it's going to be a much higher commodity over the years. I still think that is going to be the case. TLT. Okay, which way do you want to go with the Fed chair? The market is still bullish until the red line closes back under 79. It's waning. It's not going anywhere all of a sudden. You have the same problem in BND, by the way. UUP, if you notice, you had a bearish embedded reading, and with the close at 1981, you're knocking on the door of getting on a close over 21, but you're not there. So the bears are still in control. I looked at this today. I looked at FXE, and I'm going, I don't think I want my handle on any of this. And I told traders now, cash in. And this one, you lost the embedded reading. I did this yesterday. I told them to cash in front of all this, because I said, I can't imagine it's going to be a simple thing to go into all this for the Fed. And I think I was dead right. Why play that game? So one more time, remember, this is going to end very soon. And it's our sale. It's what we call our Cyber Week sale. You pick any one of the new charting course, the new one, the outside day, it'll be ready probably in a week. I'm maybe 3 chapters away from being finished. Got another one done today. I added 1 or 2, but I like the course a lot. Outside days are just so common, and people don't know how to work with them. And they're there on you all the time. I'm going to give you some ideas on that in the course. And of course, I think one of the best things I ever created were the other 2 courses where I show you stochastics in a way you've never seen them. They're on steroids the way that I do it. And then, of course, putting it all together with our full charting course. And I'm going to tell you again, these are all free with any 1-year subscription. In 2023, I'm raising prices. It's that time. I haven't done it in a decade. They're going up. So lock these in. I think they'd be very helpful for you. I'm Ira. You have a great day. Just move your cursor up here at any point. Hit the cursor, hit the icon you see. It'll take you right to the area you need. Take care.